私は今回、自民党の景色を
I'm hoping to change the scenery for the LDP a little. If we face something against national interest, I believe it's important to clearly express our position within the framework of the Japan and US agreement. At this point, I have no intention of overturning any agreements that we've made so far.
Sanai Takaichi, the pro-stimulus hardline conservative, poised to become Japan's first female prime minister, says she will honor the hard-fought trade deal with the U.S. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks climbed to a record led by Japan, with the Nikkei 225 index surging to an all-time high on the prospect of a pro-spending prime minister. On Monday, Japan's head of equity investment, Hiromi Ishihara, and Japan's Foresight's Tobias will be joining us with their outlook for markets and politics under a more right-leaning government. Meantime, Indian equity markets are entering a crucial period, with IPO proceeds in October expected to surpass a record $5 billion. Bajaj FinServ's Group President for Investments, Lakshmi Iyer, joins us with her assessment of how this massive rush for cash could impact the markets. Our top story today, Japanese stocks leading gains in Asia after a ruling party vote positioned Sanai Takaichi to become the country's next leader. The Nikkei 225 index jumped to an all-time high and the 40-year yield surged, while the yen slid against other major currencies and hit a record low versus the euro. Takaichi's win signals that the Liberal Democratic Party is betting on a swing back to the right to attract the younger voters who have flocked to smaller populist outfits. For more on this, let's bring in Bloomberg, the Asia trade anchor, Sherry Yan in Tokyo. Sherry, tell us more about Sanai Takaichi. I mean, what do we make of her ascent to the top?
Yeah, this is really a historic moment because we are now continuing to see the LDP move towards right-wing voters. Of course, we have seen the rise of populist parties here in Japan. And we know that Sanai Takaichi is a nationalist. We know that she's a fan of Margaret Thatcher, a fan of heavy metal music as well. She will now become the first female prime minister here in Japan when the parliamentary vote gets underway later this month. But it's really the pro-growth policies that Sanai Takaichi has talked about that is really the focus for investors. Will we see a return of Abenomics? Remember, she's really a student of former Prime Minister Shinzo Abe, who was her mentor, and she's talked about the BOJ's easy monetary policy, toned down her rhetoric during this election campaign. But we know that she wants to continue expanding fiscal policy. She's promised cash handouts, tax rebates, hinting at raising the tax-free income allowance as well. When it comes to the historic change in Japan's leadership to a female prime minister, the fact remains that she's a hardline conservative, and a lot of her views are actually more towards conservative male-centered society. For example, her opposing allowing spouses to have separate surnames. We are now hearing from local media, FNN, that Takaichi is eyeing record number of women in cabinet. And of course, that's the key focus right now, the makeup of the next cabinet, which will take place in the next few days.
So more spending expected, Sherry, and the yen is weakening. That is great for the markets, right? Is the market rally then sustainable?
Yeah, we are seeing a huge upside when it comes to Japanese stocks. These trades, called now the Takaichi trades, a weaker Japanese yen on expectation that the BOJ will delay the rate hikes. Of course, we are now seeing pricing in the markets having come down from an expectation of an 80% rise in rates this month down to, or 60% before the LDP election, down to 20% that the BOJ will actually move in October. And given the expectations of the Bank of Japan delaying that rate hike, We are seeing the Japanese yen, as you say, reaching new lows, especially against the euro record low. Will we see verbal intervention coming from the government if we see disorderly moves in the Japanese yen? Still a key question, but the steepening yield curve continuing. We are seeing 2-year yields down on expectations of the BOJ. And given that, of course, Takaichi has also talked about potentially the bond issuance in the long end being unavoidable given how they need to pursue fiscal policies to support Japanese households. We are now seeing 40-year yields, for example, spiking at the moment.
Of course, all eyes on the BOJ and what it does. Sherry, what does her win mean for diplomacy? Reports suggesting that President Trump may soon visit Japan, and she has, less than 2 weeks perhaps to prepare for that.
A busy agenda on the diplomatic front. President Trump could be visiting Japan. That would mean a summit with the new Prime Minister Sanaya Takaichi when she's voted in by Parliament later this month. Also, we have the East Asia Summit in Malaysia. We also have APEC in South Korea. Now, Takaichi has talked about renegotiating parts of the trade deal with the United States, and perhaps that funding of $550 billion in U.S. investments could be a tricky issue. However, she's also hardline conservative when it comes to raising defense spending. That could play well with President Trump. Of course, we have seen her comments on China as well, hawkish on China. That might not play well with Beijing. We have seen her wanting more cooperation with Taipei. That might not play well with Beijing. We have also seen her visit the Yasukuni Shrine, the controversial shrine that also honors wartime criminals. That could be controversial not only for China, but also for South Korea. So a lot of focus right now on the diplomatic path for Japan as well.
Sherry Ann, we thank you so much for your insights there. Bloomberg, the Asia Trade Co-anchor Sherry Ann, coming to us from Tokyo. Let's get perspective from Amundi Japan's head of equity investment, Hiromi Ishihara, and Tobias Harris, founder and principal at Japan Foresight. Tobias, let's start with you. How are you reading the situation? We know that Takaichi inherits, a lot of intractable challenges, including a very fractured LDP.
She absolutely has a very full plate and really a competing set of jobs, trying to unify the party, trying to modernize the party, trying to bring voters back because the party's vote has really declined sharply over the last several national elections. And then, of course, navigate some challenging economic issues as we've already been talking about on this hour. And then, of course, also really a challenging global environment and a regional environment. And so all of those, I think, are waiting for her. It could be another 10 days or so possibly. We saw the Constitutional Democrats this morning talking about possible delays and when the Diet would actually select the next prime minister. So I mean, there's really there's going to be a lag here. There's going to really be a window really where we're trying to figure out what exactly she's going to do. Of course, what parties are going to be in government even. And I think this is a major question that's going to really influence the direction of policy. And as of right now, we really don't actually know what the agenda is going to look like once she actually takes office.
We do not know the agenda, Tobias. What should be top of the agenda?
Well, I think the consensus we saw during the LDP leadership election was, in the near term, figuring out the right form of economic stimulus. And of course, there's a lot of different ideas within the LDP about the right way to do that. Takaichi's fiscal dovishness is by no means the consensus position. I mean, right now you have, a relatively hawkish government under Prime Minister Ishiba still in office and that will still be responsible for the time being. But you have plenty of other people within the LDP who are opposed, for example, to cutting consumption taxes, something that Takaichi has said at least is an option that is on the table, if not in the immediate term. She's definitely more open to deficit spending, something that we heard other LDP candidates not necessarily open to. So there's a lot of division still within the LDP on these questions, even though she's going to, of course, claim a mandate and say that the party can move in that direction or should move in that direction.
Hiromi, of course, Takaichi's win rippling through the markets. What else are you expecting from the days ahead? The yen weakening to a record level. How much more weakness do we expect?
So the market right now running pretty much as Takaichi win actually not priced in before the election. But right now, I think it would take. It's going to be the rally will be short-lived because we haven't seen exactly what type of policies she can implement, and then also as she needs to form the coalition with other parties. So I think there will be more further upside on Japan equity, but until we've seen more visibility of what type of policy can be implemented in realistic term, it would be sort of wait-and-see mode. And then also we're going to see the corporate earnings coming for the first half of the year from late this month and early next month. And that would be also the key to observe the Japan equity market.
But Hiromi, she is known to be pro-stimulus. Surely that is good for equities, so you should be buying.
Yeah, indeed. But then, as I said, that she needs to form the coalition with the other party. And then also, as she mentioned, that she would be more responsible pro-stimulus policy. So as we have some uncertainty, we have to manage the volatility of currency. As we know, we expect that the BOJ actually going to slow down the rate increase pace. So to manage the balance between the currency volatility and inflation, as well as implementing economic growth, is really tricky job, I think.
Tobias, in terms of policies and her government, what are you expecting? She's a fan of Shinzo Abe, a fan of Margaret Thatcher. Should we be reading anything into all of that?
What it really tells you, this really is a break from the previous two LDP-led governments. She's very different than Prime Minister Ishiba, very different from his predecessor, former Prime Minister Kishida. This really is a swing back in the direction of what I would call Abeism, which is, really an emphasis on national strength, national power, really building up the Japanese state's ability to defend the people in all sorts of ways. So that's military power. She talks, of course, a lot about economic security, lots of discussion about food security, lots of different challenges, and ultimately that the Japanese government and the Japanese state needs to be strong enough to meet those challenges. And of course, the Japanese economy has to be strong enough so that Japan can afford to pay for the things it needs to do to defend itself, to secure its interests. So that's the philosophy you're getting now. Whether she's going to have the political wherewithal to follow through on that, I think is still an open question. Clearly, she's trying to meet the challenge of the rise of the Democratic Party for the People, of Sansei-to. Meeting that challenge, though, might be easier said than done. She now is going to head a government that doesn't have a majority in either house of the Diet, something that, of course, the late Abe Shinzo had for the entirety of his tenure, rather large majorities. These are very different circumstances. Cobbling together the kind of stable working majorities in both houses is not going to be easy, and that's really going to shape the policy agenda, and she's going to have to show some flexibility, some pragmatism ultimately to govern, or otherwise she could very quickly run into trouble.
You're suggesting ultra-nationalist agenda. I'm just wondering how the rest of the region might take this. It wouldn't sit too well with the rest of Asia.
I think there's certainly anxiety. I think particularly in South Korea, you look at the reaction of South Korea's media to her election. I think there's some questions about, will she be as committed, as Prime Minister Ishiba has been, as Prime Minister Kishida was, to strengthening the bilateral relationship between Japan and South Korea. I think it is a question given that the right wing of the LDP generally has been skeptical of the value of investing in that relationship. And so it is certainly a major question going forward. We don't really know, of course, her history of relations with Taiwan. She goes, has been to Taiwan, has regular meetings with Taiwanese. This is something also that I think is going to cause a lot of anxiety. And there has been, some progress in stabilizing the relationship with China. So how much will that continue? I think is certainly an open question. But some of the other relationships around the region, I think, are likely to endure. I think, an investment in the Quad. Of course, she was talking about the free and open Indo-Pacific strategy continuing. Japan is a regional leader, particularly on trade. She talked of Abe's role in reviving TPP during his second administration. So I think we'll likely see a number of policies from her predecessors continue. It's just on some of these important bilateral relationships, her history could cause some friction if it's not handled carefully.
Hiromi, have politics in Japan change its fundamental story to do with growth, to do with inflation? And when you take all of that into consideration, what would you be buying in Japan?
Yes, I still believe that the Japan equity is actually a very attractive asset class because we still believe that there are a lot of value to be unlocked from corporate governance reform, which is nothing to do with actually the LDP election. So I think it's, for example, share buybacks for this year is already record high level year-to-date basis. So we should expect more to come, actually checking how much the progress of the earnings in this fiscal year, but also we do expect almost double-digit EPS growth for next fiscal year. And then if Takaichi can be successful implementing pro-stimulus policy and reviving up the domestic economy, that would be definitely additional catalyst for Japan equity.
How do you think the BOJ is reading all of this? And what are you anticipating from the BOJ in October? Markets pricing in now just 21% of a rate hike.
I also think that the BOJ is very likely to skip the rate hike announcement in October, given that the Governor Ueda's speech over the weekend, he became a little bit more dovish than the previous speeches done by different BOJ members. Having said that, as we saw, the currency actually moved very quickly, depreciating against US dollars and euro. So the higher the currency volatilities actually add extra pressure over the inflation perspective. So I think the BOJ is likely to announce the rate hike maybe beginning of the next year. So it definitely is slower than expected, but I think BOJ is still remains in the path of the normalization process.
Tobias, suffice to say, Takaichi does not represent the end of the political revolving door in Japan. How do we put a stop to that? What will it take?
The real question, I think, for the moment is, what she does to stabilize control of the Diet, and if she can find a way, whether that's bringing in coalition partners or having external, cabinet partners outside of the cabinet who are willing to support her government on certain issues. That really is the key question, because ultimately she does have, to some extent, a luxury of time. That the LD, there's up to 3 years until the next general election has to be called, just under 3 years until the next upper house election. That's a certain amount of time without elections, which would, of course, rattle any prime minister if they go poorly. She can use that time potentially to really make progress in addressing some of the really fundamental economic concerns that the public has, getting inflation under control or switching to more demand pull inflation instead of cost push inflation, as she was talking about the other day. If she can make headway on those, if she can really move an agenda through the Diet, she might actually turn things around a little bit without having to face an election for some time. But that really is the question. If she feels like she has no choice but to call an election to gain control of the Diet or to gamble for control of the Diet, then it's anything goes, and really it will depend on if the LDP really can regain a majority in a general election.
And from what you know of her, how do you think she'll negotiate with Trump? Can she negotiate with Trump in a way that's needed for Japan?
I think the immediate thing that will come to mind, and we saw this, even in Ishiba's meetings, Trump would talk repeatedly about Abe. And of course, Takaichi being close to Abe, having that bond with Trump of, having affection for Abe, missing him, remembering him fondly, I'm sure that will be played up. How far that goes, it's unclear, but I'm sure that will be part of the discussions, and her presenting herself as carrying his legacy forward, being committed, to his political vision, and and sharing certain maybe ideological points in common with the president will also, I think, figure. I think in all of this discussion, though, I mean, I think watching that yen chart, I mean, I think we have to keep in mind that if the yen weakens too much against the dollar, that becomes a friction point potentially with the United States. And we've seen at various points in time over the last several months, the United States expressing concern about the direction of the Japanese yen and being overly weak, and that could become a live issue again if this trend continues.
And Hiromi, before we let you go, just one final question. We know that Japan's debt is really high, 200% of GDP. How big a concern is that for investors?
So GDP for the second quarter of this year has been more stronger than they initially expected, and I believe that the GDP, especially the nominal GDP for this year, will remain very positive. We have seen a very strong demand for capex from Japanese corporates, and now the Takaichi actually taking the cabinet from this month. It's likely to boost this capex demand actually materializing. So the GDP, I think, is in the good path as well.
Hiromi Ishihara, head of equity investment at Amundi Japan, and Tobias Harris, founder and principal at Japan Foresight. We thank you so much for joining us today. Still ahead this hour, India's market for new stock listings is set for a record month with $5 billion in deals in the pipeline. We get more on the outlook with Bajaj FinServ's Group President for Investments. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights. Goldman Sachs chairman and CEO David Solomon is optimistic about the U.S. economy. Speaking with us at the Italian Tech Week, Solomon explained why he expects stronger growth next year despite a softer labor market and ongoing geopolitical turmoil.
The U.S. economy is in pretty good shape, and there are some very, very strong tailwinds that have really had a profound effect, and there are also some things going on that are creating headwinds and are probably leading the economy to, underperform its expectation at this time. But I'm optimistic that we're probably going to see an acceleration as we continue to head into 2026. The big structural issue that's kept the U.S. economy going so well is the U.S., and by the way, other developed economies around the world, are running very aggressive fiscal stimulus plays. Governments are spending enormously into economies in the developed world, and that keeps the economy going even when you have other headwinds. Second big macro phenomenon that's affecting the U.S. economy is all of the AI infrastructure build, all the capital spending, all that's going into the ground to support the deployment, the development, the continued growth of AI infrastructure into the enterprise, and that's a big tailwind too. That's balanced on the other side by the implementation of the trade policies, which are still getting absorbed. I think we're seeing, some of the effects from trade, but there's still more to go in terms of really understanding how the trade policy is fully implemented and how it balances growth. And then obviously the world's a little bit more geopolitically fragile, and that has an impact on growth and kind of confidence. But when you balance it all, and you saw the third quarter reading was quite strong, but year over year, from last December to this December, the overall growth trajectory will probably be a little bit less than 2%. And so that's slightly below trend, but still in pretty good shape.
And an acceleration into 2026?
I think that as the trade policies are absorbed and you have the continued stimulus and the continued kind of tech spend, you've got a pretty good tailwind. I hear as I talk to CEOs that would kind of have their finger on the pulse. Certainly the upper end of the economy is still spending quite strongly, a little bit more constraint on the downside, on the lower part of the economy. But I think the things you have to watch labor. There's no question labor is a little bit softer, and the Fed's watching labor carefully. And, I think you've also got to watch inflation and whether or not the impact of trade is just a one-time price movement or there's something, more significant that comes through, and it's too early to know.
Pretty funky camera work there. Goldman Sachs chairman and CEO David Solomon speaking with our very own Tom McKenzie. Coming up, I'll look at India's booming IPO market with deals worth $5 billion on tap this month. More with Bajaj Old's investment management next. Keep it here with us. This is Bloomberg. And we have breaking news out of the U.S. A U.S. judge blocking California's National Guard deployment to Oregon. The judge says that the order will prevent deployment for 14 days. Now, as you know, about 100 California National Guard members were deployed to Oregon despite a court order, with more troops on the way. And that's according to the Oregon Governor Tina Kotek there. Again, a U.S. judge blocking California's National Guard deployment to Oregon. The Trump administration says federalized troops are needed to protect immigration officers from protesters, but local officials describe the demonstrations as modest and largely peaceful. We'll bring you more details on the story as the details come along. Meantime, India's booming IPO market is set to hit a major milestone this month with a series of deals expected to cross a record $5 billion in total value. The two deals are worth at least $1 billion, led by Tata Capital's debut that's set to be the biggest this year for India. Now, the offerings will be a key test for investors' appetite in one of the world's busiest venues for new listings, despite growing political tensions with the U.S. For more, let's bring in Bloomberg's Maneka Doshi in Mumbai. Maneka, tell us about this IPO rush that's setting October up for record proceeds. I mean, what a bumper crop we're looking at.
Well, that's right, Has. Good morning. There are three things I want to talk about. Record October, how the IPO market or the primary market differs from the secondary market in India. And third, what is the sustainability? And by that, I mean the long-term sustainability of this IPO boom. Let's go with the first one. As you pointed out, we've got Tata Capital today. We've got LG Electronics tomorrow. Both noteworthy issues. Tata Capital, $1.7 billion from the House of Tatas, India's largest conglomerate. This is a non-bank. And interestingly, it's created some controversy here in India because it's priced at much lower than what its grey market price was. So those investors who had bought in the grey market in anticipation of the IPO are going to be kicking themselves a wee bit. But that's not it. I mean, look, we've got, a shared offices IPO WeWork that's underway already. Through the course of the month, we will see an insurance company, a payments company, an asset manager. So significant variety that potentially adds up to over $5 billion. And this year already, till the end of September, India's done just over $11 billion, putting it at fourth position in terms of IPO proceeds across the world. So yes, it's going to look like another $20 billion year potentially. That's the number we did last year. And as you will remember, a few days ago, when we were at the JP Morgan conference talking to Anu Iyengar, the head of global M&A and IPOs at JP Morgan, she said $20 billion is aiming too low. India should be more ambitious than that.
You know, it's really hard not to draw comparisons with the IPOs among Chinese companies, right? I mean, we know that they're trying to raise a lot of money to fund their AI ambition. In the case of India, it's really about expansion domestically. But in terms of investor appetite, where's that coming from? Is this yet another retail investor story?
Yes, it is, but it isn't just retail investors. Has you hit upon a bunch of interesting points. We still rank lower than China and Hong Kong, which are at number 2 and number 3 spot, in the global rankings in terms of IPO proceeds this year. What's interesting about the primary market is, unlike the secondary market, where so far we've seen a net foreign outflow of about $18 billion, in the primary market, we've seen foreign investors, come in and invest to the tune of roughly $4.5 billion. And this is data I picked up from SEBI as of end of August. So it doesn't count in, any of the offers that were done in September. And of course, October, November, December yet to be counted in. So interestingly, foreign investors are ditching the secondary market, probably because of high valuations, but looking at new companies coming to market and participating in the primary market. Already, you know that we've seen considerable support from retail investors through the course of the last 2 years. You can see that in domestic mutual fund flows, in SIP flows, so to speak. Those continue to be robust.
The key question is whether this is sustainable, right? In perhaps 2026. We've talked about Reliance possibly IPOing Jio. That's likely to happen, they say. So what are the indications out there on how sustainable this really is?
Yeah, well, I don't know how Jio will do. I'm sure it will do well. And probably one part of the rush that we're seeing right now is to make sure that, several of these companies get done with their offers before that big Titan IPO comes to the market, or Mammoth IPO, I shouldn't say Titan, but Mammoth IPO comes to the market next year. And remember, we may also see the National Stock Exchange consider a listing. That's another one we've been looking forward to for quite several months now. But the last point I wanted to make here, and this is just a figure I want to give you, SEBI in a survey found that just about 9.5%, so less than a tenth of Indian households have exposure to security markets instruments, whether they're stocks or bonds or mutual funds. Now just compare that with what the current data in the US shows, which is 58% penetration across US households. So in India, you've got 32 million households out of a total 337 million households that have securities market exposure. And in the US, you have 76 million households, that's roughly 58%, that have securities market exposure. So that gives you a sense of how much further we can go in terms of bringing more Indians to participate in India's securities market. That's a long-term take with lots of risks, of course, but nonetheless, that's a number I wanted to leave you with.
Really mind-boggling numbers. I just want to put it out there. Singapore has a population of just 5 million people. Manaka, stick around as we bring our next guest into this conversation. Let's get perspective from Lakshmi Iyer, Group President for Investments at Bajaj Finserv. Lakshmi, your thoughts on this IPO craze? I mean, when you take a look at the valuations that you've seen so far, is that a true reflection of the potential of these businesses?
Hi, Haslinda. Hi, Meenka. Good morning. So firstly, yes, it is raining IPOs in the Indian capital markets. In fact, just last week, we saw 10 listings in a day, which is in the history of capital markets, it's been a first. So there's no two ways about it that there is crazy amount of companies which are setting to list themselves on the exchanges. Well, it is good news, and it is also, I would say, not so great news from two perspectives. A, if you see the genre of companies which are hitting the main board listings, predominantly looking at consumption themes, you're looking at financialization of savings, capital markets, which aligns to the point that Meenka made, that Indian households still need to participate more in capital markets. So this, in some sense, is acting as a conduit. The second part of it, if you look at it, in CY 2024, the amount that the FPIs or foreign investors participated in primary markets through purchases, that kind of matched the sales that they did in secondary market. If you look at CY 2025 till date right now, that number that they've purchased in primary market is just 1/5 that of the amount they've sold, net sold in secondaries market. So I think there is a supply-demand mismatch which is clearly kicking in. And historically, we've seen when the frenzy of IPOs happen, markets tend to saturate. So I think that's going to be a critical watch point going forward.
Lakshmi, that's an interesting perspective you bring, that last year we saw a lot more foreign participation in the primary market. This year it's positive, but it's waning. Do you think that's because this is a very unusual year because of the trade wars, all the geopolitical shifts, and that by next year we might see foreign investors come back in bigger volume to at least the primary market, if not the secondary market, where valuations have been a significant concern?
Absolutely. I completely agree with your point, Meenka, because we believe that even tactically, the FPIs are sitting quite short on the market right now in India. And if you look at FY 2027, the valuations are looking okay, if not extremely cheap or extremely expensive. And given the fact that we are seeing a lot of consumption-related thrust happening in India, I think that momentum, even if the tactical selling stops by the foreign investors, and this, mind you, in the last 10 years is the highest amount of net selling they have done. So if you kind of see all of that and the mean reversion theory were to be true, doesn't look like their selling could continue in the same pace that we've seen in the past few months.
I'm just wondering, Lakshmi, why would foreign investors be coming back to the Indian market? We saw an exodus of $15 billion, and with, Indian stocks trading at a premium versus Chinese stocks and other emerging markets, there's more value to be had elsewhere, not the Indian market. So what's driving that optimism?
A couple of points, Haslinda, and if I would, allude to the RBI monetary policy, which just recently concluded, we are looking at a significantly benign inflation and a much higher growth rate compared to the rest of the world. I think that's a very, very, very big positive, point number one. Point number two is that the recent GST rationalization that we have seen is clearly going to accrue approximately 2 trillion rupees as a consumption spend in the overall economy, which will clearly pump prime. And lastly, if you look at the dovish undertone that the policy had, is positive both from capital market standpoint as well as interest rate standpoint. And lowering of interest rates it tends to give a catalyst to the overall growth factors. These are points clearly which foreign investors cannot ignore for too long. So while there be net buyers in bonds, it's a matter of time that we see some selling pressure abate, and going into CY 2026, some kind of buying has to resume is what our view is.
Lakshmi, given all the factors that you mentioned, should India actually be viewed separately from the emerging market basket?
Well, that's, I think, too premature to conclude. We are a dominant part of the emerging market pack, but probably you could have two parts to the emerging market and keep the higher growth markets in, probably a separate basket. And India clearly seems to be that force to reckon with. There are near-term challenges, but clearly, if you look at the medium to long term, we are entering into the earnings seasons right now, and all doesn't look as bad as what it was probably 2 or 3 quarters back. So looks like I think the clouds are still there in the sky, but the clouds are kind of getting weaned out gradually. And I think it's going to be more of a patient game for investors to make money from the current levels in the markets.
Lakshmi, the really solid support that this market has gotten, both secondary and primary, has come from retail investors, domestic institutions. I want to get your read on how sustainable you think this is. And then I also want to bring you some interesting SEBI data from last week on penetration, especially in the alternates market, and what you make of that. But first, how sustainable is the domestic institution and retail support?
So, Menka, if you look at the avenues available for Indian investors, especially the retail investors, gold has been an exceptional student of the year 1, 2, 3, and I think, God knows, for the next couple of years at least. Point number one. Point number two is that traditional mode of investments are yielding very measly returns, not even able to beat inflation, which is a reality even today. So what is the choice for the retail investor who is having disposable income? And I think that's how the capital market conduit is becoming a natural port of call, and in that process increase the household penetration into the capital markets of our equities. So I think even though you might see maybe a simmering down or sort of thing, but it's not a trend that is likely to stop anytime soon. In fact, our view is that this number is only going to enhance as more and more cities beyond the top 10, top 12 cities actually come into the investment fold.
Talk to me a little bit about that. I imagine, Lakshmi, part of this new role that you've undertaken over the last few months is to be able to reach households that otherwise had no securities market exposure or had very little securities market exposure. And the SEBI data seems to suggest it's just 9.5% or less than a tenth of India's households that either own stocks, bonds, mutual funds, or some such investment instrument. What are you doing to be able to reach a new class of investors?
So I'd say, Menka, this class of investor was always available. It is just about tapping the right segment, the right market. If you see the next breed of wealth creation, wealth generation is not really restricted to the top 4 or 8 key metros in the country. It is actually going beyond the top 10 destinations or the top 10 cities or the metros in the country. And I think that is, as we call them, the tier 2, tier 3 cities. So clearly in the last couple of months, those early days for me, kind of scan through not just the top 1 or 2 cities in India, but the other key cities where there is appetite for taking risk, point number 1, the longevity to be able to park monies for longer time, and 3, participate in this booming, I would say, India-centric wealth creation process. And mind you, these investors do not at this point in time even want to look beyond India because they have so less of India. So I think that is a very beautiful untapped or relatively less tapped market, I'd say, for the next leg of our growth plans.
And Lakshmi, speaking of appetite, a lot of that appetite also depends on what the RBI does. It did say that it is willing to go on an easing cycle. How low do you think the RBI can go?
Well, if you look at how the markets are pricing in right now, Haslinda, it's looking like at least 2 more rate cuts over the next 2 to 3 quarters, probably 1 in December and 1 more if the data permits before the financial year ends in India. So we're looking at least a 25 basis point of rate cut. And mind you, US has just started its rate easing regime. And that is also a very supportive factor for India, just apart from Indian domestic macros, which certainly are on the uptick.
Lakshmi, the biggest risk for the market then, since there's so much optimism out there?
Well, I'd say that two risks, obviously, and you alluded to it right at the start of our conversation, which is the tariff scenario, which still continues to baffle us. Things are still in a fluid situation. That's point number 1, the biggest risk. The second risk is what if foreign investors continue to show their back into India, which they have done, as I said, the largest net sales in the last 10, 11 years. I think these two are the biggest risks. From an Indian macro perspective or domestic inward-looking perspective, clearly the tailwinds are favoring and much higher than the headwinds right now.
Lakshmi, thank you so much for joining us. Lakshmi Iyer, Group President of Investments at Bajaj FinServ, and our very own Menaka Doshi there. India's been trading for about 1 minute now. Let's do a check on the initial numbers. Speaking of optimism, Indian benchmarks in positive territory, currently in the money. Sensex up about 1/10 of 1%. In terms of the Indian currency, the Indian rupee, 88.76 is the level we're looking at, currently flat versus the USD. And speaking of currencies, we continue to keep an eye on the yen extending its losses after the LDP vote, weakening past 150 per dollar. The question is, where does it go from here? Of course, that's on the back of Takaichi winning and expectations of more spending plans. So fiscal concerns remain front and center. Again, the Japanese yen currently at 150 as we speak. Still to come, President Trump pushes Hamas and Israel to seal a ceasefire deal, with talks set to resume on Monday in Egypt. We'll have an update. Keep it here with us. This is Bloomberg.
We had some very good meetings. The countries of the world, a lot of the countries surrounding Israel, frankly, Muslim, Arab, and many others have had great meetings with Hamas, and it looks like it's working.
President Trump speaking about the latest talks with Hamas. Now, this comes as Trump is pushing Israel and Hamas to agree to a deal to end the war in Gaza. The two sides are set for mediated talks beginning Monday in Egypt. Hamas has agreed to release the last of the Israeli hostages, while signaling the rest of the U.S. peace plan is subject to negotiation.
The first piece of it, which was very clear from the letter and Hamas's response, is they have agreed to the president's hostage release framework. And what needs to happen now, and they acknowledge in the letter in their response, is there now needs to be meetings which are occurring even as I speak to you now, and hopefully will be finalized very quickly on the logistics of that. What that means is, who goes in to get them? Is it Red Cross? When do they show up, et cetera? What place are they going to be? And the conditions have to be created for that to happen. You can't have bombs going off and fighting going on in the middle of this exchange.
Let's get more with Bloomberg Horizon's Middle East and Africa anchor, Jumana Basachi. Ju, Hamas responded to the 20-point Gaza plan on Friday. What was in that response, and how has it been received by Israel?
Yeah, so the response came very late on Friday evening, and of course, the clock was ticking. President Trump had signaled that he would like to see a response from Hamas. It came through Friday, where they signaled that they embraced elements of the plan, namely the release of hostages in exchange for prisoners, an immediate end to the war, so long as field conditions are met. And that is, quote unquote, a very important part of the comment that they put out, because it does signal that they would like to see IDF withdrawal from key parts of the Gaza Strip. But then also they seem to accept the idea that future governance of Gaza will be handed over to a committee of apolitical Palestinians. However, there are key omissions from their response, namely no mention of disarmament, which has been a key criterion for Israel. But then also they have said that they would like to be part of the discussion surrounding the future of the Gaza Strip, which has been a bit of a deal breaker when it comes to prior negotiations in the past. So still a lot of daybreak between the two sides. But the fact that they have signaled for the first time since the beginning of this war, which started 2 years ago, almost 2 years ago, that they're willing to release all of the hostages, both dead and alive, is a step in the right direction. And indeed, over the weekend, the Israeli Prime Minister Netanyahu did say that they are on the brink of a great achievement. And he did signal that they may be willing to accept the full disarmament of Hamas until after the hostages have been released. But then he goes on to add that they can do it either diplomatically via this 20-point plan or militarily. And what we know now is that mediators are in Egypt today. Steve Witkoff is there. Jared Kushner is there, the son-in-law of President Trump, alongside representatives from both Hamas and Israel to continue these discussions.
And President Trump urging negotiators to move fast. He seems pretty keen to get this over the line. What role exactly has he played in getting both sides back to the negotiating table?
Well, absolutely instrumental. And what has become apparent over the past week is President Trump's patience is running thin on both sides. There's reporting over the weekend that he snapped at the Israeli Prime Minister Netanyahu, saying that this is an amazing chance. He has to take it or leave it. And also, he may be thinking about, this is speculation on our part, but on October 10, there will be an announcement about the new Nobel Peace Prize winner for this year. He's obviously been angling for that. That happens in a couple of days' time. But it is very apparent that he would like to see an end of this war. He's been listening to some of the key Gulf allies in the region. That meeting that he had with the Arab leaders on the sidelines of the UN General Assembly seemed to have influenced the way they structured that 20-point plan. And therefore, it has become pretty apparent that Trump would like to see this happen, and also putting more and more pressure on Israel to reduce the intensity of the ongoing strikes that are taking place in Gaza as well.
Jumana Basachi, Horizon's Middle East and Africa anchor, we thank you so much for joining us. Before we go, here's a look at our show tomorrow. We'll be live at the Global FinTech Fest in Mumbai. Kalya Naraman Rajaraman, chairperson of the International Financial Services Centers Authority, will be joining us exclusively to discuss India's growth outlook. That is it for Insight. Keep it here with us. This is Bloomberg.